Brent, you're speaking at a lot of investor shows, and many have come to see what you have to say as valuable in making investment decisions. So first of all, thanks for taking the time to speak to me.
Thank you. Glad to be here.
So we're moving out of summer, but do you think we're moving out of the summer doldrums that have pretty much gutted the junior resource sector since the beginning of the year?
I guess I should start this off with saying I really have no idea. Having said that, I've got opinions. I think it's clear we've had some really tough times. It appears to me that we're back into a gold positive cycle, and I think that's going to give us a bit of a boost for the overall juniors in general. My suspicion is that it's going to be very short-lived. There are a lot of companies out there that are just not viable anymore. I mean, I put out a piece last week in the newsletter, borrowing data from John Kaiser. We're in the order of 80% of the companies, junior companies out there, are going to be broke this year or next year if they don't raise more money. And they're selling it, all that's less than 30 cents a share. So you can see the dilution that we're facing in all these companies. There's just too many companies out there. So I think this is a short-lived bump. And if I had anything in my portfolio that I really didn't want, I'd be looking for any volume to get rid of it.
So you're... Not overly optimistic, are we? But on the other hand, and I did read your letter. It's a fantastic letter, particularly this recent one. When you're looking at, this 80% of companies that basically need to go is kind of what you're saying. What about the other 20% then? Because, and I couldn't agree more. There's a lot of crap out there. But then you see companies that, obviously the ones that you're recommending, Mag Silver, I think is one that you're holding and mentioned in your last letter, among others. What about those ones? What are you looking at right now, and can they benefit from this whole cycle, this cleaning house?
Oh, most definitely. I think, I don't mean to be negative on this sector. I think it's really, really positive. And we're entering a period now where we're going to be seeing a lot of the low-quality companies, assets, managements, or just unfortunate circumstances fall by the wayside, and the cream of the crop's gonna float to the top, if you will. And there are going to be a lot of good, very good projects, companies, managements that we're able to buy at a relatively low price compared to 2, 3, 4 years ago. And I think this is a really, really good time coming up where if an investor or speculator is very, very focused, very, very diligent as to what they're looking for and does all the background work on it, we're going to make a lot of money buying things over this year and into next year.
Well, when do you see things moving ahead then? As you were saying right now, you see the market upswing as a bit of a blip. So obviously that means things are going to decline again before they get better. So how do you see that progressing?
Here's the problem as I see it, is that we've got, in the resource sector, we had tons of money coming in. In the past 2 years, in the junior sector alone, we've had $10 billion pumped into this sector. Most of this money is going to go away. The people have come in, they've lost money. The funds have come in, they've lost money. The mining companies almost across the board have underperformed. They have not met expectations. Margins on producing copper, gold, whatever, have declined, or at least not kept up with the price increase. So the money that flowed in has been burned, basically. And I don't see where new money's coming from. And that's really the issue. Who's going to come in with the new money? And until we get rid of all the riffraff, if you will, and until these companies start making money, I don't see anything other than it's just the small lot of us, us junior guys, just swapping stock between each other.
So right now, that's where the money's coming within the junior market.
I think so, for the most part. And bear in mind, this is the riskiest sector out there. And given what the macroeconomic situation looks like, and that the world as a whole is slowing, China is slowing, the U.S., although relatively better than most, is still not doing that well, and you've got Europe. This is not an environment that's going to make people want to go out and spend money speculating at the gambling table, which is what we are. So until the rest of the market improves and people become less risk averse, we've got serious issues here.
Right. So you're taking money. You've taken over the last while money off the table as well. What about those places where there is a lot to be made? Silvercrest Mines is one company I really like to watch. They've done exceptionally well at putting their money to work and making a mine happen. And now, taking an earlier stage project and, bringing that to 100 million silver ounces quickly. I think that's a good example of a company that's well managed, that's putting the money to work and proving that juniors can be huge moneymakers. And right now, anyway, as the TSX Venture Exchange has started to uptick in the last month, this company's really benefited in terms of its share price.
No, I agree. I think I do believe as well, or it's clear that the other side of this coin is that regardless of what's happening in the macro environment, we're still using metals. There's still a demand for that. And the issue we've got, and this is what Quentin and I are working on this week and the next week, is we've gone through 146 gold deposits trying to select out the ones that are really, really high margin. And you'd be surprised how few deposits out there look like they're something that a major company would want to buy. So
absolutely,
the few good ones are going to be worth a lot. And that's the place to focus.
Well, can you not lay some of the blame for these crappy projects becoming, front and center on just the high gold price? Because back at 800 to 1,000 per ounce gold, none of those projects would even be looked at. And just because gold is $1,500 an ounce doesn't mean a major is going to look at a project that's got, $1,000 per ounce gold costs.
Well, exactly. I mean, the cost of production has risen from whatever it was, 200, 300 bucks back in the old days to cost of production is close to 800, and your all-in costs are 1,200 to 1,300 bucks an ounce, all-in costs. So the margins are very, very small. So they're going to be looking for those high-margin deposits. And that's what's key.
Right. Let's talk about. Sorry, go ahead.
I guess I forgot the question you're after here, but you asked how did we get so many companies out there and so many crappy projects? It's because people didn't understand the actual difficulty it is in finding a real deposit. And this comes down to, number one, geologic issues, and number two, metallurgy. Then you start looking at jurisdictions. So all those issues have come into play.
What about the market itself, too? Today, Ben Bernanke sounds like he's suggesting quantitative easing is a distinct potential in the near future. The market's reacting to that. If that happens, obviously you're going to see more money come back into the system, aren't you?
Yeah, I think you're right. If that happens, I personally, I don't think it's that sure of a deal. My sense is that we've seen a number of QEs in different forms, and their potential to have any impact is diminished each time. And my fear, what Bernanke should be thinking, is what if I do it again and absolutely nothing happens? He's got one invisible arrow in his sheath now, and if he shoots, nothing happens. It's all over. So I personally don't think we're going to see it.
So tell me a bit about that then. If if you put in $400 or $500 million, or sorry, billion, I should say, into the system, how can it have no effect? Because all this cash is now washing around. It's going to be absorbed for projects, ostensibly for infrastructure and so on. How would an influx of money like that not have an impact?
No, I think it would have an impact in terms of more speculative investments. I mean, that money that came in previously, it really hasn't helped us any in terms of solving the problem. What it has done is it's just made the bankers and such a bunch more money because they do all these different speculations and that.
Right.
I don't think it solved the fundamental problem, which is going to take some time, which is debt and liquidity.
And to what extent then, moving on to the another side of the coin, I guess, is manufacturing, manufacturing's declining. That has a big impact, particularly the decline of manufacturing from China, but there's similar reports out of the United States. That impacts, obviously, productivity, causes a decrease in productivity. What does that do to metals?
Well, certainly it's going to have a negative effect on base metals. We're going to see that across the board. We've seen BHP, Rio Tinto, a number of the major miners either cutting back on development plans or shelving projects, that sort of thing. So we're seeing the effect already, particularly in the iron ore and copper sector. Not so much copper, actually, iron ore in that there are shelving projects or slowing down projects. So we're seeing the decreasing demand already come into our market.
So which metals in particular do you see in a positive light and which are distinctly not looking good?
Long term, they're all good. And this is the key point. We're burning through, there's a slide I use in my presentation quite often where I show a picture of the Bingham copper mine, which is one of the biggest copper mines in the world. We're burning through one of those every year in terms of production. Likewise, we're burning through one Carlin Trend gold deposit or gold trend every year. So regardless of whether base metal prices go down over the next year, 6 months, or 2 years, further out, that demand has got to be met. And so I try not to look short term. What I'm really focused on is the very few metal deposits, discoveries, that offer the potential of a high margin operation. That's what I'm really keying in on. And regardless of the economy, those are going to be bought by mining companies. So that's my real focus. And in terms of metals, I'm pretty much, I would say, a little over half focused on gold and precious metals. The other half, I'm just kind of looking around and playing different business strategies in this sector as opposed to metals.
Okay, and listening to you talk and that talk about that slide, you're a geologist, and that's really clear. How does being a geologist change your approaches toward your investment decisions?
How does it change it? It actually focuses it. I really believe what you've got to do in investment, especially in this sector, is you got to be a sharpshooter. Scatter shooting doesn't work unless everything's going on. And I focus specifically on geologic data that tells me either a project's working, or if I can find that fatal flaw, I can find that ahead of the crowd and get out of a stock before it becomes obvious that this thing isn't working. So geology is the key to what I do in my letter and in my investments. And on top of that, we start then you look at the business plan and the share structure and the jurisdiction. But geology is, if you're looking for gold, it really helps to know a bit about the geology, eh?
I get the impression that typically when you invest, you go for long positions rather than in and out.
Yeah, that's what I do. I mean, writing a newsletter, I don't think it's fair to be moving your subscribers like in and out, back and forth, that sort of thing. It just doesn't work. So I'm pretty well focused on what I really believe will work in the long run.
Right. Your newsletter is really fascinating because you do more than just help people make investment decisions. You kind of demystify, the technical report. You've covered legal action between mining companies and detail your thinking behind these investment decisions. That's really a lot more than other newsletter writers offer out there. What's the premise behind the newsletter? How was it born?
Well, I took it over from Paul Van Eden back in 2008, and I'd been working with him before that. But and his letter was basically about what he was doing with his money in this sector. So I just carried that on. It seems to me the most honest advice you can get from anyone is what they're doing with their money. If they're telling you what they're buying and why they're selling it, that's as honest as you can get. It might not be right, but it's as honest as you can get. So that's the basis of it. But I recognize that there are 1,500 junior companies out there pushing out information, promotional material, some good, some bad, to the people that read my letter. And so what I want to do is also provide some sort of educational background whereby they can read a news release and come up with the right questions, like what's wrong with this? What should I be looking for? Why doesn't this work? There's no way I can cover them all. And in the letter, I try and focus on 20 stocks or less. But what I'm hoping to do is help everyone understand this sector and make it a better sector and make themselves some money along the way.
I loved your deconstruction of the Barkerville technical report. I mean, it wasn't, it was a big story, and anybody who reads press releases and talks about them knew that, something was clearly wrong. but you guys took it much farther and really went and took it apart. How long did it take you to do that?
We spent days on that.
Yeah.
Quentin and I. Quentin did it the first time the report came out. He went through it. I went through it in detail and actually checked some of my assumptions with a real resource estimator. And we wanted to be right on this. And we put out what we think are legitimate concerns, legitimate observations that need to be addressed by Barkerville. They, for some reason, don't seem to like my letter.
I'm not totally surprised. But, you know, keep them honest, right?
Well, it's again, the resource estimation to some degree is subjective. So there's going to be some slop between, or differences between one estimator and the other. And what really has to happen, I think, with Barkerville is if they really want to show the world and the BCSC, et cetera, what they've got, bring in another estimator that's acceptable to the BCSC and the general public, and let's do it again. If it's there, it's there, and fantastic.
Well, they're going to have to do that anyway, aren't they?
It would appear that way.
Yeah. I noticed that you're also not afraid to give credit where credit's due, talking about other analysts and how other writers affect you and your writing. How important is it, and how important has it been for you to learn from others in developing your own investment criteria, your own investment approach?
It's helped a lot. I came into this, cold back in '97, working for Rick Rule here at Global Resources as his analyst. Prior to that, I'd just been a consultant around the world. And the game of investment side of it is completely different than straight geology. So in that respect, it's been real useful talking to people like John Kaiser or the Coffins, et cetera, that have been in this sector a long time and understand what happens in the background, how these things really play out, how the Vancouver market works. A number of brokers I work with as well that help me, and it's been really useful to me to talk to people that know this industry way better than I in terms of the business side of it and the stock side of it.
What is it, do you think, that investors can most learn from you and from your newsletter?
I think focus. Focus is really, really important. And understanding why you bought a stock, what you expect to happen, which is key. What are the hurdles and goals? What do you need to see in terms of results in the management that convinces you or reassures you that this is a good investment? So you've got to follow these things very well. And it's not that hard to know more than the other guy. Just study these things. I think it's real important to actually have an advisor. If you're not a geologist or mining engineer in this sector, if you've got someone that you can bounce ideas off of that knows this sector, that's a big help too. This is a very complex sector. So those are the things I think you can do. And on my website, there's a lot of free information. There's a tab called Geo Insights that we've extracted a lot of my geologic discussions, and they're free to the public. There's some technical reports there. I think the more people know about this sector and understand how it works, the healthier it'll be. And there are some fantastic people out there doing fantastic work in good companies. And that's what I really want to see is the good guys rise to the top.
Right on. Well, thanks a lot for taking the time to share all this with us. We do appreciate that.
Thank you.
Okay.